Hello, everybody. Welcome to the Sunday live stream. I'm joined as ever with my buddy, Jerry V. Hall. Jerry, how you feeling today?
I'm feeling good, man. Today's a great day.
Yeah, today's a great day. Today's a great day if you want to pick up some cheap stuff because, I mean, not in the morning so much, but of course, everybody, this is why we're here today. We need to talk about Ethereum. Ethereum just hit an all-time high, blasted off, and it was looking good. And, Ethereum goes, then alts will follow. And we had did we hit 5,000 almost? Almost, but you know what people do? People will tell you, diamond hands, bro, super cycle, it's never going down. And then they laugh at you as they're selling off because that's pretty much what happens. And then we drop down. Not like it's a bad thing. I mean, would anybody be disgruntled a year ago to see Ethereum at 47.38? No, absolutely not. But of course, when we start to tick up, this is a very short amount of time. This is from 126 to like 30 minutes later, dropped like that. And then here we are. So on top of Ethereum going down, the natural exuberance, of course, is to say, okay, this is it. I knew it the whole time. God candle, diamond hands, cycle's going to keep going. This is awesome. Put it all in there. Let's go long, and then you get liquidated. And this is from CoinGlass, and you see that. I found this quite fascinating that the 4-hour wrecked as far as for doing liquidations, almost $500 million in 4 hours was wiped out. It's like $100 million an hour. And then in 24 hours, we had 617 million get liquidated. Not too bad. But I mean, you can just see here, and this will tell you as far as the liquidation heat map, over 1 hour, it was mostly Ethereum. Over the 4-hour time frame, you have Bitcoin, Ethereum, and a bunch of other, Solana and stuff like that. I can see Anna, Link, maybe Sweet. 12 hours, same thing, Bitcoin and ETH, and it's just a Bitcoin and ETH world. That's pretty much what it is. But Jerry, what do you think so far about this like all-time high run up and then go down? Do you think there's any kind of manipulation? I mean, some people say it. I'm not for sure. I don't know.
I don't know. This is what I think I know. I think I know that trading is becoming more sophisticated. Agents that are not human, AI agents, are taking a more active role in trading, especially in the digital asset space, where you're not necessarily having to deal with, trying to integrate a bot into your Charles Schwab account, right? It's relatively easy to integrate a bot into your MetaMask account or your Trust Wallet, wallet or what have you. And as we are seeing, when you look at the regular stock market, a really good day would be capturing at 3%.
Yeah. Oh yeah. 3% is huge.
And so a lot of traders have come over for the volatility, not necessarily because they believe in these assets, but they absolutely adore the volatility going on in the market. And as more sophisticated technologies come to this space, we're going to start to see arbitraging take hold, and these wild swings will be more collapsed because people will be setting bots to not take the top range, but to take the mid range because they're happy with 6% or they're happy with 8%. Most people are. I mean, if you come from the traditional markets, that is a month that you can capture in an afternoon in this space. You know what I mean? So it'll be interesting how trading evolves as the technologies and the market participants start to rotate from high-tech, high-frequency trading firms into the digital asset space.
Yeah, and especially just what you talked about as far as like the bots and the agents and things like that. It comes down to sell pressure, or what I call the selling multiplier effect. And we're already seeing that in live action. We're seeing margin trading, leverage, and we're seeing, of course, liquidations. Leverage is a funny thing. I'm not a big believer into it. I know some people are, and some people say, it's not bad to do like 2 or 3x. Sure. It's just like the 40, the 50, the 100x kind of craziness. And that's what really causes these swings. Then of course, when liquidations go on, then the people who are like, well, what's going on with the market? Well, the market's tanking. Is it because was there a Bitcoin double spend? Was there some kind of like hack that went on? I don't know what the hell's going on, but I got to start selling so everybody else is selling and get the herd mentality. Then there's so many as far as like order books and market makers for the different exchanges, you can just see that the volume in some different alts are not that high. So then all of a sudden things get wiped out. Like Jerry talked about, the bot trading, and then you go, and of course, different exchanges, you have the slippage, arbitrages, and then the people putting their stop loss orders. And it's just a big effect over time. And I think we're seeing that yet again and again. Jerry, anything to add before we get into this sweet little ETF flow?
Think that chart that you put up is a great visualization for people to kind of get a sense of the vastness of our market, right? It's really evolving. You know, and all of those are attracting capital that wasn't here 4 years ago.
Yeah. Yep.
Cycle is different in that respect.
There, you know, it's a funny thing. The more things change, the more they stay the same. But I will say, quote me on that one. Ethereum, as far as the ETF flow, it was almost like people knew what was going to happen. As far as the ETF flow, we didn't talk too much about this, I think, on Friday. And then Saturday, we did a pre-recorded. I was kind of busy. But if we take a look here, as far as the ETF flows, there was some negativity over on BlackRock. And let's see, who else? Actually, that does it. BlackRock on 20th of August, they sold 257 million. But the very next day, they sold they bought up 233 million. Then on Friday, 109 million. And the total's looking pretty good as far as like with the Ethereum across the board. A little bit of redness week before last. But then take a look at this. Let's take a look at the Bitcoin flows. A little bit different. And we can see over the last 3 days, BlackRock was like, you know what? Let's start selling. And I know people will say, well, it's not BlackRock selling. We just did a whole video about who is selling as far as institutions, advisors, retail, who holds the actual ETF on their balance sheet. Hint, BlackRock and ARK both do that. And then also about, you know, who is getting advice. Hint, it's not retail and advisor. It's the institutions that are getting advice directly from BlackRock and directly from ARK. So when you see these like big time sells, it could be a start off of those, but it's also a continuation of, again, that herd mentality. So, Jerry, do you think we missed anything here?
I think these are important elements for people to understand that these large pools of capital are acting in their own best interest. They're not here to facilitate something necessarily for you. And it was the retail market that built BlackRock over the years. It was the retail market that built Goldman Sachs. It was the retail market. You know what I mean? But now these entities control so much capital that they actually start to become positioned in such a way that they can influence a market.
Yeah.
Like just by what you just showed us. So whether or not it is Cathie Wood owning 0.5% of the entire BlackRock ETF basket, or BlackRock themselves owning part of their own ETF basket and moving it in such a way to influence future purchases, what have you. These are these almost gray areas of manipulation that they get to say is just trading. They call it trading. We call it market manipulation.
That is pretty funny. Hey, man, that's market manipulation. Oh, you mean trading? Yeah, exactly. It's like, did you just cut that guy off? No. I eased into his lane because that's how I drive.
I just merged.
Yeah, I just merged. What are you talking about? So if you have questions about like institutions, advisory, and retail as far as like ETF, we just did a video yesterday. And I'll try to link in the description, but if you just do a search for digital asset news, ETFs, this one would be the first one that actually comes up. Hey, before we move on and we start to, because I'm going to talk about like how things are kind of different, but a little bit the same. I want to show everybody, and something I never talk about, the Solana ETF flow. And I didn't know it was this abysmal. It looks like, yeah, this, you know, and we were all kind of downtrodden when the Ethereum ETF did absolutely nothing, but the Solana one is doing pretty bad as far as like flows go. Maybe it'll do better in the future, but right now this is what you have the last 2 days. What is that? 3, 5, and then a whopping 3.8 million, 22nd of August. I don't know. I don't think Solana is doing so great as far as that part, but as far as like the price action for the token itself has been pretty good. Anyhow, that's all we have. So let's just to quantify this and just to talk about, well, what kind of risk are we talking about here, Rob? Because I mean, we just hit an all-time high. What does that mean for Ethereum? There's this great website, you know, the CRYPTOVERSE, link in the description, 10% off the first month over Ben's site here. And for the longest time, XRP was the top king of risk as far as like in the top 30 or so. at 0.75. What I like about these risk levels, and people remind me all the time, Rob, don't use those as a price predictor. Okay, so here we go. Price prediction for XRP. We have 0.75, which of course, this is all time and risk bands and things like that. Right now, a whopping $3.04, which is really good. So congratulations, XRP holders. You guys really deserve this. I've always said that. But if we go up the scale to 0.8, $3.39. 0.85, almost $4. 0.9, 4.7. And if we go to perfection, if that actually happens, $6.52. Now, I don't know if we're going to hit that. I mean, the only whale that I know is a guy who lives in Puerto Rico, and he says it's going to go up to $15 this cycle. That was his prediction. So that'll probably be the only thing that XRP Army cuts out of this whole video is that part. But if we take a look at Ethereum, it's number 2. Oh, no, I take that back. Can't be. Oh, it is number 2. Ethereum, with this massive price swing, is 0.7. Would everybody like to see where that lands in the risk lines for like 0.8 and 0.85 and 0.9? Would you like to see that? Of course you would. That's why I'm not gonna yeah, that's why I'm not going to show it. So go ahead and sign up for Ben's website. No, I'm just kidding. Okay, I'll show you a little bit. I'll show you. This is a good one. All right. So 0.73. Damn, 4,805, whatever it is right now. At 0.8, 5,869. 0.85, 6,800. And we'll stop at 0.9 is 8,069. And I guess since we're here, 1.0 perfection is 11,093, which I got to tell you, I think that's what Tom Lee is thinking about is going. I would just, I can't give financial advice. Me and Jerry are not financial advisors. But what I do like about this tool itself is to use it as kind of like a gauge. If you've laddered in, which I know most of you have in the bear market, because me and Jerry were talking about it so much, you've probably laddered in a dollar cost average or even lump sum. Maybe it's that time to use those risk levels to start to ladder out and start taking profits because nobody ever went broke taking profits. Jerry, what do you think?
Well, I'll tell you, I'm not in the position where I'm going to sell my Ethereum that I have that is staking, right? But there is a definite like on or off metric that I'm going to use to either compound the yield or cash out the yield.
Yeah.
Right? And now that we've hitting an all-time high, I'm now at that level. New all-time high means I start now collecting the yield. I will sell the yield.
Oh, that's interesting.
Sell the yield. I'm gonna leave the principal alone. Leave the principal alone. Let it churn in there and earn my little 4% a year. But all the yield now I will cash out it when any of, and this is kind of a thing for any of those tokens, when they hit all-time highs, let's collect what we can. Let's take advantage of that.
Jerry, are you talking about the yield from the staking or the yield something else you're doing? Okay.
The yield from the staking. I earn about 4% on Kraken.
Oh, do you really?
Mm-hmm.
That's interesting.
Yeah.
I would do that on TANGEM, but they don't offer it yet. I don't think. I think it's
where we got that Tron staking. Don't forget.
You got a point. You got a point. But I've been busting these guys for a long time. Like, hey, I need you guys to put more on there. I really need you to do Cardano. It's kind of important to me. I'm a stake pool operator. I'd like you guys to do that. Chop. Anyhow, but I'm only one man. So we have that. Well said, Jerry. And then these are all great things, and there's some things moving behind the scenes. I didn't know this, but Peter Thiel, which just went public with his exchange Bullish, I think it's called. There was an article over Wall Street Journal where it talks about Peter Thiel leading the pack of investors piling into Ethereum. And I know people kind of don't get it as far as Ethereum goes, but my whole thesis is it's just like in the 90s, 80s and 90s, mostly 90s, where you would just see like office after office after office. They just had nothing but Microsofts, and nobody ever got fired for doing Microsoft. Microsoft kind of sucks, and it sucked back then. And I think, honestly, I'm not a big fan of it, but it never worked 100%. It wasn't really fast. Definitely wasn't cheap, but no one got fired for using that. And I think it's the same thing right now as we're looking for a big niche of the TradFi markets. They're loading it in. Before we get into this, the ROI after having an ROI after market cycle bottom, which I can see why people are kind of concerned. Jerry, what do you think about the Peter Thiel situation and him kind of driving, and also all the other Ethereum treasury companies that are out there that are, bombarding, buying up Ethereum?
I think, you know what? I think you said it eloquently, and I support it in that I do not believe Ethereum is the best layer 1 technology on the board.
Right.
But the more attention Ethereum gets and the more capital it attracts, the harder it will be to displace.
Yeah. No.
Therefore, it would be silly of me to sell any of my Ethereum that I already invested in.
Yeah. Obviously not. K Swiss asks, is Jerry planning on round tripping? Nobody's planning on it, but it does happen, unfortunately. Let's see. So shifting gears a little bit from Ethereum to a little bit of like the 4-year cycles and where are we going? I want to show you 2 things. And this is the ROI, Bitcoin return on investment after the halving. So we're going to go back in time to 2012, 2016, 2020, 2024. And the return on investment to the top, from the halving to the top. And we're also going to take a look at from the bottom. It's different. And remember that thing called the super cycle?
Mm-hmm.
Or no, I should, well, super cycle and extended cycles. I want to show you just real quick where that came from. I think this is where it came from. Because if we take a look at a halving cycle, and it's kind of weird because you got to go from, 2012. I guess it's not that weird. This is the first one. See how many days it took to the top? 369 days, 370 days. But the second cycle, look how long it took. So, okay, there's an extension. Makes sense, right? Having cycle 3, a little bit longer. And you can just see how it's like, oh, okay, I get it. It took us 370 days here. It took us 526 days here. It took us 546 days to hit a top. And we're still in cycle 4. But as far as return on investment goes, I mean, you can just take a look over in the very first one, the first cycle, that's a 91x. I mean, that's crazy, right? If we take a look at in red, the second one, that was a 27x. Take a look at the one in yellow or orange or whatever this is. I'm colorblind. 7x. And then this one, a paltry 1.8. So for us to actually get to where you think we could possibly be, we have to go almost vertical. And then take a look at this one. Bitcoin market cycle bottom. So when it bottomed out to the actual top. Here's the first cycle. And this is the one that's a little bit strange because it goes from 2010 from the bottom. I mean, you got to do it to the top. Here's your ROI, like 459. It's just crazy, 459x. Market cycle 2, look how many days that took. That's a lot of days.
Yeah.
It makes sense. This is 2013. What about cycle 3? Okay, now do you see where people kind of got this idea of extended cycles? Market cycle, but it didn't happen because they were looking at 1, 2, 3, and they thought market cycle 4 is definitely going to just elongate. And this is what happened. It didn't. And one thing you'll notice, though, is that it kind of flatlined from this point right here. This is April 14th. Oh, that was a good time. April 2021. And it dropped by 50%, which I had over here. I don't know if you remember this time, everybody, but this is your first cycle. You're a baby. And this last time in 2021, everybody thought it was going to go to the moon. We dropped 50% in like a month and a half. So over here, this is why it's kind of flat. But here we are. ROI from the bottom is that 19? Yeah, 19x. So for us to kind of get to within these two levels, we got to kind of go vertical, or we have to elongate, one of those two things. Jerry, what do you think of that? What's your thoughts?
I leave the charting to the experts.
Okay.
When I look at cycles, they're always correlated to, for me, what's happening outside of crypto. Are we in a favorable lending environment? Are we in a hostile lending environment? Are we in a very speedy, robust velocity of money type of economy? Or are we in an area of scarcity and people are holding and they're not spending? I look at those kind of macro kind of things to kind of inform me. So when I'm looking at those kind of charts that you just put up, I can understand how they relate to the past. I don't necessarily see how they're going to predict the future.
Yeah.
You know what I mean? I'm not a great chart guy. I'm not one of those type of dudes.
You know what? That's actually a good point. It's just like when we look at those charts, I want to bring those charts up just to show people why we've thought about elongated cycles and where it came from, and then where we'd have to be to kind of match, just to get in between cycle 3, cycle 2, cycle 1, just to be just a little bit higher. It's going to take a lot, quite honestly. But for every I guess that's not even a bearish case. It's just a case. We have to take a look at just the things of like, again, where were we at? And I think there was this thing I shared with Jerry this morning, but I'm just going to go real quick. And this comes down to like what you were talking about, Jerry, as far as the macro. There has to be liquidity. Liquidity has to come there. As everybody is aware, we're probably going to get a rate cut in September. I think it'll be 25 basis points. I don't think we're going to get 50, but who knows? But we have to understand as far as like where we're coming from, what that is. So quantitative easing, people to say it's you're printing money. Well, it is. But quantitative easing is central banks, Federal Reserve and such. They buy government bonds or other financial assets from banks and institutions. Essentially, they're easing everything off, and that would lead to the money printing. So the money supply increases, interest rates pushes down, and it stimulates growth. And that's where you get the money printer meme, which is the only thing that's important, the memes. Then you go to quantitative tightening. They reduce the balance sheet, so they can put everything they want to onto it. But at this point, for quantitative tightening, like, we got to sell this stuff off. They sell the assets, money supply decreases, pushes the rates up. It slows the economy, and it's usually bearish. So for that, you can say, well, what was it like for these last cycles? Well, this is your federal funds target range. And what I'm looking at is just the blow off top bull years, which 2008, 9, 10, those are just regular years. Actually, 2009 was a Bitcoin created, so I can't really say 2008, except it was the great reset. 2009, 10, 11, 12. 2012, we had the halving. 2013 was the all-time high. And during that time, we had flat, zero, essentially, federal funds rate, nothing changed. And we saw one of the biggest raises biggest increase of our ROI. And then the 2017 bull run, we were raising rates. I know people always say, no, we got to cut. Did you know in 2017, we were raising rates and we still hit an all-time high? So when people say, it's different, not really. You just got to pick the cycle that you were there. Then the next one in 2021, I don't know if you guys remember this. There's a thing called coronavirus. That was a big thing. And during that time, as we were raising rates, after that in 2020 or so, we put them back down to zero essentially. And then it was just, we cut them and it was flat. We had a great bull run. Everybody was happy. And then we raised them like crazy and we flatlined. Now we're cutting again. So when I take a look at it and people say, this is different, it's never done this. It's pretty much a ton of the same thing. Here's quantitative tightening part as far as the Federal Reserve's total assets. You can see we've put them on the balance sheet. We've done nothing and gone sideways. We've increased in 2021 and we've sold off in 2024 and 2025. So we've been in all different types of provisions. And then this is the big one that Jerry was talking about, the M2 money supply. We've gone up like crazy. We've decreased. And now we're going back up. And this is just America's M2 money supply. If you want to take a look at the global M2 money supply, it pretty much matches Bitcoin, S&P 500, any type of assets that's out there. We go up, have a little bit of a dip. You can see that in 2015, 2016. It matches up, pretty much to the spot. And then it's up and up and up, a little bit of decrease. But now we're at all-time highs as far as like money printing globally with little stagnation. So Jerry has a lot of things to go over. What are your thoughts on this craziness that is liquidity and quantitative tightening?
It's such an advantage for us. I just think I put the juxtaposition between what I know and how I think today versus when I got into investing in 2016 and started to try to understand money, the difference of perception and understanding. It is so clear to see that from a monetary policy standpoint, we take 3 steps forward, expand the money supply, and then only ever take 2 steps back. We never go back to zero. So over time, there is always going to be more money in the system, right? If we understand that game, now What does that mean? It's the inflation of the money supply. What does that do? Well, that tends to always bring appreciation to real assets, anything scarce and desirable, right? Well,
Yeah.
guess what? Real estate, art, NFTs, crypto, Bitcoin, gold, all these things are relatively scarce relative to the money supply. We can literally guarantee upward appreciation relative to the value of money, and it just makes it very clear. There's one thing to do: buy good assets.
This is true.
It's like a guaranteed winning formula. Just buy good quality assets, and over time, you're going to get richer.
So what are good assets, Jerry?
Well, that's why you tune into Digital Asset News every Sunday to get the answer to that. But no, just that by itself, Rob, was revolutionary in how I have hope for tomorrow versus, oh my God, it felt like I was just having to work harder and harder year over year just to stay afloat. I don't feel that way anymore.
Yeah, I don't either. I think it's a pretty good point. And it's something that, like, I don't know if anybody got into this before they got into crypto. I didn't. As far as inflation went, I just assumed it was what the government told me, which was it's just those greedy corporations, and they keep raising the price. They keep raising those prices. Don't look over here behind this curtain. And then I started to realize about, there's this thing called the Treasury and the Fed Reserve, and they're the ones printing. I didn't know they printed money. Why are they printing so much money? Oh, it's because we're the actual world reserve. That's crazy. How much are we printing? Geez, crime. Trillions of dollars from nowhere. Wow. It's a pretty good trick. And down the road you go. And lastly, I will say this, as far as like what Jerry, just to piggyback off, and we talked about this before, is assets. We're all buying assets. Everybody here in the comment section, me and Jerry are buying it. People that we talk to are buying assets. I think if you don't buy assets, you're in a pretty big hurt locker. And it's just like this. This is a meme I always remember. Imagine playing Monopoly, never buying any assets or investments that generate income. And you just went around the board collecting $200 just to stay out of jail. That's Monopoly, and that's the life of most people, unfortunately. And I think that's why, like, once you learn about, assets, the price goes up because why? Just what Jerry said, because they keep printing money. And they'll never stop. Once you start, very hard to get to decrease that. And that's just pretty much it. So, Jerry, actually, there was one more thing I want to talk about, because so we made a lot of assumptions here, and we want to, as far as like why and how things are different, not so different. But as we move forward, there are some concerns to me. If we know that they're going to keep printing, and the M2 money supply in the United States and globally is going to keep going up, so we have to buy assets. It really shouldn't matter so much of the price action now. Do I think that we're going to see a blow off top in Q4? Yes. Do people disagree with me? Yes. They think it's going to extend into 2026. And I showed you the case for why it could potentially be as far as elongated cycles. But I will say there is some just some minor concern things that are around here. And this was one from Dan Tamper, founder of 50 Trade Funds Capital. And this was an interesting one. He says, this bull market doesn't end with 82% of those surveyed by Morgan Stanley saying they don't own crypto. They have a tiny long exposure in Bitcoin and ETH for 2022. All these metrics will make new highs in price. 2026 will become a boom year. What he's talking about is there was a survey sent out to Morgan Stanley as far as asset managers. And Morgan Stanley is not a small company. They have 1.6 trillion assets under management. And what the question was in the survey, which is, which of the following cryptocurrencies do you hold? I'm not sure if this is do you hold or do you recommend? But you can see in this dark blue, I don't know if that'd be navy blue, I'm not colorblind, 2022, and then in this brown gold 2023, green 2024, and this light blue in 2025. You can see that as far as like Bitcoin, it went from 63% in 2022, so holding it, down to 12% now. Ethereum 60 to 7. Solana is the only one, 27 to 7. But they did get 1% increase up. So if I don't mention that, Solana people go crazy. And then XRP only 5%, that's pretty good actually. And then Cardano went from 27 to 3%. So I see like this, and I look at the current administration making crypto essentially their big stay of what they want to do. They want to increase it. We get regulatory clarity. We have sovereign wealth funds. We have endowments, all the institutions that I can name. And it seems like there's more funds flowing into it. A little bit crazy with the leverage and the liquidations, but we're doing pretty good. I just see something like this. I'm like, did we miss something? Is it just that retail does not want to come back and they got screwed over too bad? Or where are we at, Jerry?
It's that there is a rotation of the market, right? The market participates. There's a rotation in of, we'll call it smart money.
Okay.
This is one of those really weird type of deals where the smart money was not in this market first. It was retail. It was guys like you and me, right? Yeah. It was guys just like you and me, and it was a real grassroots movement. And we are seeing a rotation. That what you just showed, that 82% of the people that were holding crypto in 2022 are no longer holding crypto now. That's a retail number, and it really goes to show that old adage that, you know, it takes an iron stomach to stay in these markets, because markets can be irrational. They can be painful. They can be agonizing. You and I have had our fair share of pain and agony with Celsius things, and me with liquidity pools and blah, 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 blah. And I'm sure everyone listening to the sound of our voices have that same agony, where most people do not want to suffer. We don't like suffering. Therefore, when we do start to suffer, we go, okay, this is like putting our hand on a burning stove. I'm not going to do this anymore. Well, when you're a trained professional, like a one of those guys sitting on the high frequency desk for Morgan Stanley, they're happy to do it. So we are seeing a rotation, and we have to accept that big capital is coming to our playground.
Yeah, and I got to say, like, this is something that I remember. Yeah,
or exactly. Laser eyes or whatever.
Laser eyes. I just remember this, and I think maybe this is part of it. You know, you go from cash to Bitcoin, Bitcoin to blue chips to mid caps, and mid caps to low caps, and then back you go. I don't know if there's a rotation going on right now, but I can tell you that it feels like there is. And you can see, if we look at Bitcoin dominance, I know it went from its all-time high. I think it's below 60% now. So they're going into something. It's probably Ethereum. It kind of seems like that's one of the big winners again for this cycle. So, I mean, I'm happy for all. Like, I own Ethereum, is, you know, mostly Bitcoin, so I'm pretty happy. Ethereum's there. Yeah, that's good. I own a good amount. Probably buying. Well, I've been dollar cost averaging as well. So maybe that's it. And there's one more thing I found out here. Mullet has a good point. Greed always brings people back, because, I mean, the narrative for retail, I think, has been drawn out. 2017 ICO season, then it was DeFi summer or whatever. Then it was NFTs, and it was meme coins. And niggas keep getting slaughtered.
I remember the big gaming craze towards the end of 2021.
Yep, exactly. Sure, we got excited about that one. Yeah. So, sorry, Jared, the audio is just a little in and out for a second. But maybe it's my Wi-Fi. This always happens. Like, I can't hear you, and then everybody else can hear you for some reason.
I was just reminiscing at my metaverse scar. I've been scarred by my metaverse investments.
Voyager could be one. Yeah, exactly. I remember, you know, metaverse. Remember when Facebook rebranded to Meta?
Oh yeah.
And metaverse play went crazy, and then Mark Cuban came out. Yeah, me too. And then Mark Cuban came out. He's like, "Why is everybody buying real estate in the digital world? We can just make more digital real estate. This is stupid." And I was like, "Mark doesn't know what he's talking about." Now here we are.
And here we are.
Yeah. So everybody, that is it for today. If you'd like to stick around, we're going to take some questions, answer everybody's questions to the best of our abilities, then we'll get out of here. But let's see what people has. There was a good one from Farrar. He said, hey, it's funny how Bitcoin dumps, then Rob and Jerry start the live stream 1 minute later with a market dump stream. They are obviously the whales. That could be true. Yeah, I'm not going to say.
Don't buy the dip yet. Let me get my limit order placed. Okay, placed. Go ahead, buy the dip.
Let me make sure I can dump on everybody first of all. All right, cool. So this is a good one. Elaim says the best time to buy is Monday, early hours, 2 a.m. You know what? There is a time. Where is this one? Buy. There was this one chart I was going to show where it shows you like the best time to buy for each different asset that you have, but I can't find it. I'll try to come out there. Actually, Jerry, you can ask this question. I can look for the chart. Okay. Off topic, but ask Jerry, what areas of Costa Rica do most expats move to? It's a good question.
The state of Guanacaste. It's on the northwestern coast of the country. That'd be number one. So it's like if you looked at Costa Rica, we have 7 states. Like the United States have 50 states. Costa Rica has 7 states, and one of those states is called Guanacaste. Northwest coast. They have their own airport up there called Liberia, and a lot of expats move there. I love my area. I'm in the southern west region of San Jose, which I'm only about 20 minutes from the coast, and I live in a community called Perez de Lidon. Absolutely incredible.
That sounds like a nice place. You know what I've been telling everybody? Your story, your heart attack story.
Oh.
And well, not that my friend Jerry had a heart attack, but it was my friend Jerry had myocardial infarction, and he's doing his mountain trip. He got placed, I believe, into first ICU, cardiac cath lab, maybe some rehab, medications, the whole shebang. Had no insurance and paid $6,000.
It was a little under, it was like 5,600 and something total.
That's crazy. See, that's what I'll be doing at some point.
You want to know what's crazy? What was crazy is I'm 4 hours away from the capital by bus. I'm in this hospital, and they're telling me, Jerry, this is serious. You should get in a helicopter and go to, and I'm like, how much is the helicopter? And the doctor goes, I don't know. It's your life. And I go, how much is the helicopter? And he goes, nurse, find out. And the nurse found out. And he goes, like $750. I went, I don't have that much money in my account. But I'm sitting on $1 million crypto portfolio. And I don't know if I'm going to live or die. And I don't want to spend $700. Talk about fear driving behavior. That was horrible. That was
horrible. Yeah. They're like, Bitcoin is freedom, except when you want to sell it. Then you're like, you know what? Let that heart attack roll. I'm going to roll the dice, see what happens.
Exactly what I did. Can you believe it? That was so I would act differently if it happened again.
Right, exactly. I'm sure right now there are people watching this stream going, I would have done the same thing. And there's like other people like, that's crazy. I'd never do that. But some people out there, I guarantee are like, I would do that. I personally, no, I would take that helicopter ride. But I'm like, man, I got to spend for this. Farrar says, Jerry, you're a cheapskate. That's true. But
I'm trying. You know what? I will tell the audience, and one of the things, Rob, you've helped kind of inform this in my past experiences. I am considering liquidating a relatively large chunk of my portfolio to build a house on my property, even though my portfolio isn't back where I want it to be.
Right.
And so I am seriously taking a very hard look at this.
Hey, this would come in the next question from K-Swiss. Jerry, you said you don't plan on selling any of your Ethereum. Why round trip? Likely bear market. And you pretty much answered it right there. You're like, I'm going to liquidate because I have these other goals and plans, and that gives me freedom to do other things that I want to do.
What I was starting to do is I need to not place my portfolio value as the number one priority in my life. I think I should start looking at the quality of my life being maybe more important than the quality or the size of my portfolio.
True.
Maybe that's something, and I have been putting more thought to that recently.
Hey, we only go around this place twice, or excuse me, we only go around the planet once, so we might as well make it worth it. OG says, if I was a little smarter, I would hold more Bitcoin, but I got lucky and 80% of my profile is ETH. That's working out right now. And that's good. Yeah.
It's working out, you brother. I don't have enough ETH to sell my original holdings. So I'm just going to let it, earn yield and sell off the yield when the parameters are correct and compound the yield when they're not, when it isn't.
Yeah, I can see that for
Look
sure.
at Mullen. Look at Mullen.
Look at Mullen. Must be almost in the bull market because he's back. Trump administration has acquired a 10% stake in Intel for the conversion of a previously issued funds and pledges. I think this is because of the CHIPS Act. That was in the Biden administration, though. And a move intended to bolster U.S. chip production and secure national interest. I just saw that. It's a weird thing. This doesn't sound like the free market. The U.S. government said, hey, we're going to not subsidize, that's a bad word, but we're going to invest into chip production here in the States by buying a big chunk or 10% stake in Intel. Jared, what are your thoughts on that? Because it seems like that's not how it's supposed to go. I mean, I get it for national security, but if they're going to do that, I want the national security strategy.
When you put your lenses, your national security goggles on,
my horse
and
blinders,
you realize that, you know, the majority of chips that supply computation to the world are coming from Asia, specifically Taiwan, and there's all that stuff with China wanting to take over Taiwan. I understand the subsidy, right? I understand saying, listen, we need chips manufactured in the United States.
True.
We do. And from a national security standpoint, we do. We can't rely on the global market in times where military aggression could cut off the supply of that very valuable resource.
Yeah, exactly. You know, like I remember in 2020 when we were trying to get, like, we couldn't get enough masks, which who knows if those worked, but we just couldn't get enough because we couldn't supply them because we couldn't create anything here. Like nothing, just about. Well, I shouldn't say nothing, but as far as manufacturing, it was a big thing. So maybe we should do some reshoring. That's going to take a lot of time, though. A lot of time. All right. What do we got? Congratulations to E. Halim. He is now a moderator. Congratulations. Hey, let's see. Hani says Intel's been between $19, 16 sats, and $26. I like how Hani said that. You see, he put it in sats. So it's $19 or 16,000 December sats and $20, 23,091 sats forever. All right. Okay, what else we got here? Any other questions? Chris has a good point. Corporatism is greater than socialism. That's for sure. For sure. Mullet says start with Biden. Yeah, that's $1 billion. ETH is going to be the next US dollar. Easy. Although, I will say one thing. I'm having a real hard time moving funds from a bank here in the States, a credit union, over to my bank in Puerto Rico. Because there's so much that you can do per day, and there's so much you can do per week. And then, of course, if you do too much, they start to question, like, 40 days. Which, you know what, quite honestly, sometimes I get. Because, you know, if someone, you know, broke in and able to get some information, and they're like, hey, why are you moving 6 figures when you didn't do anything for, like, the last 2 years? Okay, makes sense. But as far as, like, people say, like, this chain's not fast enough, or this chain's not cheap enough, let me tell you right now, if you've ever used Swift or you've done some kind of like money transfer, especially like just a bank wire, sometimes it takes, well, if I did it on Friday, it's not gonna get it until Monday. And it's gonna cost me at least $20. Sometimes it's 25 at one of the banks, which sucks. So any chain that takes less than 48 hours and costs less than $20 a transaction, I will be okay with, because the bank system that has is awful. Anyhow, and just stay up. That's all I want you to do. Make sure that you can keep working. Health is everything. But Jared, do you follow this stuff with the ETFs, LTs, Litecoin and Solana ETFs coming in September? Have you?
I think that anytime you can talk about a passive flow into a digital asset, it's something that's really good for our industry as a whole, right? If the U.S. capital markets open themselves up to any asset, it doesn't matter if it's Solana, Atom, Cardano, I don't care. It's good for our overall industry, right? Because ETFs equate to passive flows. If somebody in a 401k or an IRA or whatever are consistently buying and not selling, they're investing, this is really, really good for our industry, right? So right. I'm all for them. And I do kind of follow them a little bit, not every day, but I try to keep aware.
Sounds good. I gotta be up to speed on that one because I haven't really checked too much, especially after that. Like the Bitcoin Ethereum ETF did fantastic. I mean, now Ethereum ETF, but the other one, the Solana one, just a laggard. See if that can pick up. Yeah, the case is that's what happens when you have enough money, Rob. It's actually, I'm not moving that much. It's like the daily allowance is like $1,500. That's it. And then per week it's $3,000. I'm like, I've got to go talk to your manager because I have plumbing that doesn't work and I've got a solar panel that is defunct and I need to get the guys out there to fix it because I get complaints from the Airbnb people.
Yeah.
So, hey, how about this one? Grayscale. Well, this is Grayscale. The Grayscale Cardano ETF. I haven't heard too much about it.
Well, they're going to be available on all the major players. It doesn't matter if it came from Grayscale or State Street or it doesn't matter who it came from. They're going to be available on most every market.
Yeah, I wonder which one will outperform.
The market will decide. I think it's all good though. Let's keep supporting all of it moving forward.
Yeah. Let's try to do that. All right. Hey guys, I don't think there's any more questions. This is great. We've done our job. Jerry, we did it. We did our job. We educated as much as we possibly could. Mostly you. And now we get to take off. So everybody, that is it for the Sunday Weekly with me and Jerry V. Hall. If you want to follow Jerry, there's a link in the description for his X account. But that's it for this week. So everybody, thanks so much for stopping by. Appreciate you. See you next one. Adios.
Ciao.